What is Bitcoin? A digital commodity? Do I have to deal with that? Well, now Fidelity's talking about rolling out the 34 million retail accounts. You've got the government embracing crypto assets, saying we better figure it out. Congress, senators getting educated on it. The CFTC, the SEC getting educated on it. Big institutional investors starting to take Bitcoin positions, the media. Now you've got Bloomberg covering crypto, you've got CNBC covering crypto, you've got an entire world, media analysts, politicians, financiers, and they're all starting to figure this out.
During a recent interview, Michael Saylor emphasized Bitcoin's role as a secure haven for investment. A prominent cryptocurrency trader who had previously capitalized on the crypto surge has expressed reservations about Bitcoin's current market position. This comes after Bitcoin erased all the gains it had made following the news of BlackRock's intention to launch a spot-based Bitcoin ETF. According to data from TradingView, on June 14, 2023, Bitcoin was trading as low as $25,127. By July 13, 2023, the Bitcoin price was as high as $31,472. Over the past 3 days, Bitcoin price fell by 11% to around $25,000 from over $29,000 recorded on August 16. Despite enduring various lows, there remains a prevailing belief that Bitcoin will emerge victorious in the market's near future. Mark Yusko forecasts that Bitcoin will reach the $100,000 mark in the upcoming year, while Tom Lee anticipates a valuation of $150,000 for Bitcoin. In his interview, Michael Saylor pointed out that amidst turmoil, options for finding refuge are scarce. While considering gold as a potential choice, he noted that gold's value has diminished as it remains an inert metal, progressively losing its worth. Saylor strongly believes that, in his opinion, Bitcoin stands as the lone true safe haven in such circumstances. Ben Laidler, global market strategist, says that despite a slow summer for performance, crypto as an asset class is in fact one of the best performers of 2023 so far. He points out the market has lower volatility than gold, but institutional adoption could prove a real driver of the market in the months ahead. Now, let's shift our focus to the video.
We're in the middle of chaos. There is no place to hide. Your choice is you could buy gold, but gold is dead metal and it's just getting ground into the dirt, right? I can seize your gold. Gold is the half-life of money, and gold is 35 years. And you can't put gold on 8 billion iPhones. So the problem is there's no tech in gold, and it was a good idea in the 19th century, and it's centralized. Governments can seize it. And the gold miners keep debasing it. They keep mining more gold, right? In the best year, you get 2% more. In the worst year, someone seizes a bunch of gold, dump it on the market, you get more than 2%. So people are looking for a safe haven. What's it going to be? Property in Africa? Property in Venezuela? You can't have property in North Korea. Property in Argentina? A business? A business where? A business in Argentina where the currency collapses? What good are your cash flows if the currency that you generate the cash flows are collapses in value? So I think here's the big idea, really big idea. Everybody in the world has to decide where they're going to locate their family. They have to physically, they have to decide where they're going to locate their themselves in cyberspace, their mind. Are you going to watch Facebook all day long? Are you going to read Twitter? Are you going to be on YouTube? You're going to go to Rumble? Are you going to look at Instagram? Right? Where is your mind? Right? And then the third question is, where is your business? Are you going to run a yoga studio in Miami? How about a yoga studio in New York? How about, are you going to run a farm in Zimbabwe, a ranch in Argentina? Are you going to buy a company that has business interest in China? How about owning a bunch of businesses in Ukraine or Russia, right? So where is your P&L, right? And the fourth big idea is, where is your balance sheet? Okay, you're a podcaster on YouTube. Okay, well, you better make sure that you comply with YouTube platform requirements. Otherwise, they turn off your podcast and they crimp your business. That's where you generate your revenue and you generate your cost. But now where are you going to save your money? Are you going to save it in US sovereign debt? Are you going to actually store it in gold? Are you going to buy land? Where? In California, in Ukraine, and Russia? Where? In Florida, right? Are you going to buy S&P index stocks? Are you going to buy Bitcoin?
Global government bond yields extended their climb with the U.S. 30-year reaching the highest point since 2011 and other benchmarks returning to 2008 levels as resilient economic data challenges the view that central bank rates are peaking. The significance of the U.S. Treasury 2-year note's approximate 5% yield has historical parallels. It harkens back to before the financial crisis and the birth of Bitcoin. This correlation suggests potential headwinds for most risk assets. According to Saylor, Bitcoin's extreme volatility is noticeable as it moves in tandem with other high-risk assets. The significant shift in the financial landscape over the recent year is particularly noteworthy.
I think Bitcoin is it's very volatile. It's getting jerked around. All risk assets are getting jerked around. If you look at if you look at one of the more interesting things, right? The 2-year, the 2-year Treasury was 16 basis points a year ago, and it's currently like 3.9%. We went from 16 basis points to 390 basis points on short-term money. The mortgage rate on a 30-year mortgage, has gone from 2.7% to 6% in 12 months, right?
Crazy.
The yield curve is inverted. You get paid higher interest on a 2-year loan to the federal government than on a 30-year loan. The 30-year loan is 350 basis points. So summary of all this, it's this. We had an unprecedented expansion of the money supply in March of 2020, where we just pegged interest rates to zero, and the bankers said we're going to keep interest rates at zero for the next 4 years. They literally implied, they said not until 2024 will we raise interest rates. Okay, well, that's one panic. And now we've got the other extreme, which is the fastest tightening of the money supply, like one of those oh crap moments. Oops, I think we overdid it on one side. Now we overdid it on the other side. And what you see is risk assets. They're all getting hammered down, Bitcoin included. But look, all financial assets, bonds hammered 20%, NASDAQ hammered 30%, S&P, gold hammered, silver hammered, and Bitcoin hammered. But on the other hand, tangible assets, oil, natural gas, food, any type of energy, they're all shooting up. Right. And I think people are going through this moment where they're like, I guess I'm going to freeze to death or starve to death unless I have some of that tangible commodity stuff. And the financial stuff, I guess I'll trade it. And meanwhile, the politicians, they play with the little knobs, attempting to do good. And it turns out that it's very difficult for humanity, for any human being, to actually make adjustments fast enough and intricately enough so that they can do good without probably doing more harm than good. And that's where we find ourselves right now.
Bitcoin has been on a downward trend in recent weeks, erasing all the gains it had made following the news of BlackRock's intention to launch a spot-based Bitcoin ETF. Some analysts believe that Bitcoin is still a good investment and that it will eventually recover and reach new highs. Ultimately, the future price of Bitcoin is uncertain and it is impossible to say for sure what will happen. This concludes our discussion for today. We encourage you to share your thoughts in a comment section below. If you found this content informative, please give it a big thumbs up and subscribe to our channel for the most up-to-date news and videos. We appreciate your input and look forward to hearing from you again soon.